what happened to gold in the last few weeks and what are the next key targets to look out for. This is your weekly price update and analysis brought to you by Ainslie Bullion and the Gold and Silver Standard. My name is Joe. You're looking at gold here on the monthly time frame. It's priced in US dollars, 1,926 right now. We're using the tradingview.com website. So it's been a couple of weeks, I think maybe 3 weeks since we've done a proper gold, silver and platinum analysis. The last video we did was a silver specific video all about Fibonacci and can Fibonacci predict silver prices. I'll put a link above to that right now, well worth checking out. But the previous video from that one was right here, and this is when the price was with gold. If we go to this area right about here, we're at around about 1,900 US dollars at the time, and we had been talking about this particular downtrend line right here. We needed to hold above there, particularly hold within this rectangular box right here, and that was somewhere between 1870 roughly to $1,900. And I was saying that if we did fail to hold that, then very likely would be coming down to test this area here, somewhere between the 1790 to 1810 level. So let's see what happened, and you certainly know what happened. Again, this is on the monthly time frame. Let's pop onto the weekly, but let's do the quick weather report, see where we've come from, and then see where we might be going. Let's pop on the indicators as well, and you can very, very clearly see here that rectangular box area. I've gotten rid of that other one. Above it, that 1790 to 1810 area. So what happened was, pop onto the daily, we did break down through this downtrend line, and as expected, once we broke down and we closed below it on the daily for at least a couple of days, we had that big spike down. So we spiked down for a number of days, and right there you can see it became went into the extremely oversold territory on the relative strength index on the daily time frame. And right there, bang on $1,810, pretty much exact. And you can see that big rally. Now, on that day, that was the day that we spiked down to 1810. That was Friday, the 6th of October. And what happened the next day? Of course, the attack on Israel from Gaza. So the Gaza-Israel situation started occurring. And then from there, whether or not that was the catalyst, whether this was just going to be the cycle low, this low here, whether it was going to be a low anyway, remains to be seen. You know, we can certainly argue one way or the other, but we have certainly seen since the Friday, or since the Saturday in particular, a huge steady move right back above this downtrend line, which was a very healthy move, all the way back up to $1,930, which was actually a previous level. I've gotten rid of a lot of my horizontal lines, but you can actually see here, right there, see $1,935. I had that one drawn in, and that's actually where we peaked at in the last couple of days, 1,930 roughly. And we have opened the day so far green, and so it's looking quite positive, I would say. Let's pop onto the weekly, see how healthy we are there. So actually back on the daily, what you'll notice, we have moved way past the average of the relative strength index on the daily time frame, heading up into overbought territory. Not quite yet there, so there's certainly room to move to head into the extremely overbought territory on the daily time frame. So, you know, more of a spike up before we see a bit of profit taking from traders. That is certainly not out of the realm of possibility. So could certainly see a bit of a spike further. Let's again go to the weekly. And on the weekly time frame, what you can see, that very, very huge weekly move. We have opened so far. We opened here on the weekly for this week at 1,930, spiked down to 1,908, but on the weekly so far you can see that that is a spike down so far, so quite possibly room to move, and we could certainly close green on the weekly at the end of this trading week as well. What you'll notice here on the relative strength index on the weekly time frame too, we have headed back over the average right here. So if I just find that, and we'll move that up, and then we'll put that down. There we go. So that's also looking healthy for gold, at least in the next couple of weeks. In my opinion, we've headed back above there, and we've held that as support so far. So looking good so far on the weekly. Of course, not financial advice. Anything we say here is certainly just my own personal opinion, not necessarily the opinion of Ainslie itself. But I will say there is room to move higher before we see some major resistance, and we'll do some of those targets in just a second. Let's take a look at the monthly time frame. Look at that. Very classic move down to previous support levels. Again, right down on that 1,810 US dollar mark. Huge spike. Looking good. Let's pop in. Actually, I'll pop out to this quarterly as well. Really want you to see this one too. This is the quarterly chart. That is looking quite juicy at the moment, if that's a technical term. That's looking quite good as well. So I'm a bit more on the bullish side for gold in the next couple of months at least. Remains to be seen what happens from here. And let's pop it out to, let's do the big macro. Let's do the 6 monthly, and I'll pop off the indicators. Let's do the 6 monthly. So on the 6 monthly, we opened in June. We opened at 1,920 roughly, and we are looking green on the 6 monthly. And let's take a look at the yearly. We're definitely green on the yearly as well, because we opened at 1,823. So interestingly, we opened at 1,823, and we had that spike just the other day down to 1,810, but back above. And we've got a couple of months, 2.5 months until the end of the year. I would also say that's looking pretty good so far. So definitely more bullish at the moment for gold. Let's go back to the daily, and here are the couple of targets that we need to have a look at. So right here, and we'll wait till those, we'll pop those indicators on. There we go. So let's see, are there any other little levels that we need to look at? So let's take a look at right here. Let's see, we'll take it from the spike. I won't take it from the spike, I'll take it from the close on the daily. And let's see, where would be, yeah, that would be pretty indicative. So what you could see right here, for example, if we're taking it based on the closes rather than the big spikes, you could see right here, let me draw that in once again because I missed that. You could see right here that we have broken above this downtrend line, and looks like we potentially have come to retest it. Are we going to bounce off from here? Post a comment below. Are you bullish or bearish in the next, let's say the next 4 weeks, the next 1 month? What do you think is going to happen? Post a comment below. Would love to hear your opinion. I'm going to stay bullish for the moment while we are above this downtrend line, and certainly while we're above this downtrend line right here. Just that spike there down to 1810 tells me buyers definitely in control of the market at the moment. Certainly not out of the woods yet. So let's take a look at those targets for gold. I'll keep that. And I'm just going to use some Fibonacci now. Now, we did the big macro Fibonacci analysis on silver again. I'll put a link. I already put a link above to that, but I'll put a link below as well in the info section of the YouTube page and as part of the pinned comment. The big macro silver. And I didn't do it for gold, but I didn't record it for gold, but I did it just recently. And you can see it right here. So Fibonacci, it's taking it from this old high of $870 roughly, 880, and the old low right here of the $250 level. Now you can certainly see that between this time here, so between this high and this low and the move all the way up, that Fibonacci was a pretty good indicator for certain support and resistance levels. You can certainly see it here. It was certainly a big level when we came up to here at $730. That was at the 0.786, so that was a level of resistance. Then you saw levels of support, but the real big one, you can see right here very clearly the 2.618 extension from this old high and this old low. This is going back to 1980, and this in the early 2000s, late 90s, early 2000s. The huge spike, that's when we peaked at that $1,920 level. It didn't hit it exactly. That's at $1,875, but it was around about the ballpark right there. Question is, can we continue to use the Fibonacci from this high and this low moving into new territory? Now, I'm not certain because once we've made this new high and we've made this what looks to be the new cycle low, what tends to happen is you want to then create a new Fibonacci from this high and this low. So I'm going to do that to see what the next little intermediate price targets are. So what I do want to do is keep this in the back of my mind, and what I will probably do is have this as the big macro one, and then I'll do a little one here. But let me just get rid of this for a second. I'll just modify it. And then when you come back to see the videos again later on, I'll probably have both of them in. So let's take it from this high and this low and have a look at the next potential little targets that we need. So that's that high and that low. And what you can see here is the next potential extension target. Now we're talking about new all-time highs at the moment, and then we'll get to the little intermediate stages. So if we're basing it on this high right here, 1920, and that's in 2011, and the recent lows in 2015 of that $1,050 level roughly, you're looking at a next extension level, the 1.618 of around about 2,470. You could, I guess, comfortably call it the 25. So 2,400 to 2,500 US dollar level. That would be an area of resistance potentially. And again, the 2.618 from this high and this low, which was a previous big level with the 1980 and late 90s area. That's at 3,350, roughly call it, $3,300 to $3,400. That's the more blue sky thinking. Now let's take a look at where we need to move above if we base it on a different Fibonacci level, and we're just going to take it from this very simple and short-term level right here. So again, from this start of this triple top almost, so 1, 2, 3, but it's not a triple top technically because I don't think we've broken down too low. But right here, 2,070 roughly, and this low right here. And you have, I'll pop it there, there's the very clear, can you see that? The triple bottom for sure, 1, 2, 3. Again, this is on the monthly time frame. And you can see that clustering of prices, and I would say right here is that 1,970 to $1,980 level is a level of resistance for me. Personally, if you find a level of resistance before moving into new all-time high territory, if you have a different level, post a comment below and let me know. But right here, that 1,970 to 1,980 US dollar level is going to be, for me, an area that I would be looking at for resistance. Breaking above that and then holding above that, then we can be confident to say we're on our merry way onwards and upwards. And then that's when those other Fibonacci extension levels like $2,400 come into play. So that's the major levels for gold. And if I were to say, if we were to break down further from here, or what would give me confidence to say that we are going to stay above and then make newer all-time highs in the coming months and the coming years ahead, I would certainly want to stay above this downtrend line right here. Watch out for this $1,900 level. This is the 61.8. So the 0.618 Fibonacci from this high and this low. So watch the $1,900 level, watch this $1,850 level, and I will keep it at that. So watch 1,900 and 1,850, but also take into account this downtrend line right here. So I'm going to stick with, for now, I'd want to see it hold above the $1,900 level. That's the big one for me. Line in the sand, got to hold 1,900. If it's going to break and close below 1,900, then quite possibly we're heading down further. I'll leave the much further targets for another time. Let's just see where we go in the next weeks and months ahead. That is gold. Let's take a look at silver. It's a video again, if you haven't watched it, high of $50 or $48 back in 1980, and we take the old low of $3.50 back in the early, and then it sort of confirmed it in the late 90s, so early to mid 90s right there, confirmed the bottom at $3.50. You then have what I think to be very clear signs that this high and this low were predictive for the coming prices after this low. So you had a cluster of pricing around that $14 level. You can see it very clearly here, that $20.70, $20.60, $20.70 level right here. Very clear. I think if you can see that on the monthly, we had a spike on the monthly right here at $31. Of course, we come up to the previous all-time high of $50. But then even from there, you had this support level, and we've been talking about it for a very long time, this $26 level. Now look at that $26 level right there, 1, 2, 3, 4 levels of support, is the 50% level from the old high of 1980 and the old lows of $3.50. So right there, you can see that's that $25.90. You can call it $26. So we found support at that Fibonacci level, again, from this very old high of 1980 and the old lows in the early 90s. And then you can very clearly see a support level here around about that $14 level. You had that COVID spike low, which is a black swan event, unforeseen, so a quick spike below, but closed around that area. And you can quite clearly see here that since July of 2020, we've been ranging in between this Fibonacci level and this Fibonacci with a little bit of a dip here. Now, you can very clearly see, again, that $26 level as an area of resistance. And just in the last month, we've had a month low so far, and quite likely it will stay the monthly low for October at, what do you know, $20.70 roughly, which is, again, the old high from the old highs of the 80s and the early 90s. I find Fibonacci to be very fascinating. It doesn't mean it's fully predictive, but over a long period of time, as I've said before, that if enough people or traders or the market manipulators, if you want to go that far, if you want to talk about it that way, they need some sort of system. Let's just say the markets are fully manipulated. Let's say they're fully computer traded, for example. I'm not saying that, but let's just go with that scenario. They need to use some kind of system in order to have the illusion of free pricing, if that makes sense. So you have to have resistance and support levels. Could they just be using Fibonacci as those levels from this old high and this old low? It doesn't matter how it or why it happens, but it seems to happen. You can see very clearly those points. So that is silver on the big macro kind of view. But what you can see here on the weekly time frame, and I was talking in this Fibonacci video, and we just spiked down to this $20.70 area. I was suggesting that could potentially be a bottoming area, and so far it has been. So in the last couple of weeks, along with the move with gold, of course, with the Gaza-Israeli conflict, which could have been the catalyst for the move in gold, silver followed, but not as high. So gold has outperformed silver in that time frame, not as high of a move, but you can certainly see off that $20.70 low, we've come up to a high of $22.85. Definitely not out of the woods for silver. What I would say is we just need to break above that $26 level and hold above, and then we're very confident to say we're on our merry way to that next level. Fibonacci, I'm basing it on, of that $31.20 level right here. Pop on the daily though, any particular areas that we need to be aware of? Let's see if we do a quick little bit of trend line analysis. Very simply, you've probably got that, and let's have a look right here in very intermediary. You can see that we actually have broken out. And could you take it from there? Let's take it from there, for example. So just in the very short-term time frame, and I'll take it from that spike, so right there. So we're actually above this downtrend line as well, so broken above this, which is a good sign so far. Also take a look at the daily on the relative strength index when we came down to that $20.70 level. We coincided with an extremely oversold signal on the relative strength index on the daily time frame, currently heading in the upward direction just over the halfway point. So certainly more room to move on the daily time frame before we start getting into overbought territory. You could probably say, if you're doing a support and resistance line, you could say right here would be an area of resistance, so around about that $23.50 level right there. If you can see that little blue line, and I will make that a little bit more opaque so you can see that. Around about $23.50 would be a resistance level that we'll probably find some resistance at, because it's a resistance level. What I would like to see for a healthy move is up to $23.50, maybe back testing this downtrend line and then on our merry way. So take into account $23.50 as a potential resistance point in the next few days. And of course, as I said, we definitely need to move over that $26 level, and you have this downtrend line right here. Just depends on when that hits. I will keep all of this in for next week's analysis, but really wanted to show you again that Fibonacci from the old high of the 1980s to the old lows of the early 90s. I think that is still very much in play for me. If you disagree, post a comment below. On the weekly time frame, you can see on the relative strength index, we have found support roughly here at that 40 level, trending up, but we are not above the average of the relative strength index yet. So I would say not out of the woods yet for silver. We're more likely out of the woods for gold, but again, bear in mind where gold goes, silver tends to follow over time. So could this just be we're waiting for silver to catch up to gold? Quite possibly. That is silver for this week. I will leave it at that for silver. So my next resistance target is $23.50 in the next few days, and of course the big $26 level we have to get over. Hopefully this time is the next time. Post a comment below. What do you think will happen? Will it follow in gold's stead? That is gold. I've done silver now. Let's do platinum.com website. And in the video from a couple of weeks ago, we were sitting at around about $900. So we're back to roughly where we were last time. So 903, 895. So we saw that move. Let's pop into the daily time frame. Okay, but positively on the positive side, we are seeing it trending upwards on the daily time frame. But interestingly, again, it has not gone into extremely oversold, and eventually it will on the daily. That just depends on when it hits. So let's take a look at the weekly time frame, and I'm also going to show you the Fibonacci that I've done for this as well, so the longer term, and see whether those prices hit, if that makes sense. On the platinum, again, mostly the most positive about gold. Silver tends to follow gold. Platinum does more of its own thing. So right here you can see this horizontal line support level right there of that 37. So far that has remained as support. We haven't broken down through that on the relative strength index on the weekly time frame. So that's a good positive, but not out of the realm, not out of the woods so far. So I could see definitely, if we break down from here, a spike down to that $750 level is definitely a possibility. Let's take a look at the monthly, and then I'll show you the Fibonacci. The monthly, you can certainly see on the relative strength index here, we are trending down as well, and you can see that support level of the 37 mark on the relative strength index. Right here, that's also a level of support on the monthly time frame. So I'll move down to here before we see potentially a move back up. That's quite possible right here. So I'm going to say for the moment, and I could be absolutely completely wrong, but there is more than a 50% chance that we see lower prices in platinum, and I'll remain that's my call for that. So more than 50% chance lower prices for platinum. Of course, not financial advice. All that stuff could be wrong. Now let's take a look at the Fibonacci that I have done just recently. So you haven't seen this before. with platinum. So this is the longer term view, and I'll give you the quick macro view. Of course, that downtrend line that we've been talking about for a very, very long time goes back to February of 2008. We've tried a bunch of times to break through it. There have been failed moves every single time, and with fast moves to the downside. So I took the highs and lows of February 2008 and the low of 750 at the end of the sort of the GFC, global financial crisis, big spike low down. That definitely seems to have been the low point. And then you can see we revisited that low in August of 2018, confirming definitely a bottom right there. This little spike, you know what that is. That is the March COVID spike, where everything just had a bit of a blip, bit of a Marvel style blip right there. So I'm not including that. I definitely think if we had not had the COVID crash, then this would have remained as support, that $750 level, in my humble opinion. You can disagree. So that's why I'm taking it from this high and this low. And very interestingly, it does coincide with price action since this high and this low. So for example, we came up to this area, didn't quite hit it, of that area here of 1,875. Roughly that created the start of this downtrend line. But from there, what you can see pretty clearly, and look, it's never exact, but you can see these clusters of resistance and clusters of support. Again, bear in mind, I keep harping on this, these are Fibonacci levels that were predicted back here. So the high of 2008 and the low of 2008 as well. So these have been in, let's just say, for example, we go have a time machine and I put these in exactly in February and October of 2008, and I didn't move them ever. These are future predictive prices or potential predictive prices, and the price since then has found support and resistance at those levels. Found support right here in December of 2011, its resistance here in 2012, resistance roughly 2012, 2013, rough support here again in 2013, a very quick breakdown, little bit of support there I guess in 2015, not support there, rough support there, but definitely support there because you had that old low coming back down of 750. And very clearly here you can see after we had the COVID low, then we had that beautiful move in platinum all the way up to, geez, what do you know, previous resistance, but it happens to be this Fibonacci level of 1,340. And just recently as well, this is the 0.236 of $1,115 roughly. What you can see here, it also has acted as a level of resistance right here roughly. You can see it here, a spike, and you can see here, here, and here as well. So in my humble opinion, the Fibonacci is predictive for me. Again, if you disagree, post a comment below, based on this high and this low. So that informs me personally that these next levels, so for example, you've very clear resistance level here of $1,340, clear resistance level right here of $1,525, and I'm going to use those personally as my next big resistance levels on the way up eventually, if we do, to the previous all-time high. And then I will use personally, and I have a right to change my mind of course, but at the moment I will use this high and this low as the prediction prices for later on. So you have the 1.618 here at 3,250, and in particular you have the 2.618. I like that one as a predictive move after breaking through a long-standing all-time high, the 2.618 at $4,700, and let's call it $4,800. I'm going to stick with those for me. Again, this is the big macro for platinum. But if we're just looking, if you're in platinum at the moment and you're looking at purchasing, or you're looking at taking some profits in the next number of days and weeks, of course we have to break above this downtrend line, the big one going back to February 2008. So I would see this level here around about your $990 to $1,000 level as the cluster where if you're looking for evidence to purchase, you would want to wait to see it break above and hold and then create support at these levels before being confident that you want to take that trade and get into the market for the first time. But if you're a stacker, maybe you're just dollar cost averaging into platinum, and then that's just a great way to do it. Just every paycheck, for example, buy a little bit of gold, a bit of silver, a bit of platinum. If you're waiting to back up the truck, as they say, then I would consider roundabout, of course, this previous low, I would call it right here, of $840 level. You can see that very clear support, but the big one, if you're really waiting for the big one, a potential support level at the $750 level right there. And again, that's a Fibonacci level as well. So that is my opinion on platinum. Post a comment below. Do you have other indicators that you prefer to use? Do you think Fibonacci is ridiculous? You don't like it? That's okay. Let me know your thoughts. I find it quite predictive myself. We will see you next week with another gold, silver, and platinum analysis. If there's any other things that you would like me to take a look at, of course, we do crypto as well here at Ainslie, ainsleycrypto.com.au. So if you want to see Bitcoin, Ethereum, or some other altcoins as well, post a comment below and maybe I'll do one of those if I get enough requests for it. Please head over to Ainslie Bullion YouTube channel, youtube.com/Ainslie Bullion, and hit the subscribe button. Head over to ainsleyBullion.com.au to buy your gold, silver, and platinum bullion. Balance your wealth in an unbalanced world. Take care, and we'll see you next time.